Google just broke a major support at 2,400. If you guys don't know yet, this is an alert in my broker that sets off when it hits a certain price target. The markets are bleeding and it's bleeding hard. This is the second day of many days capitulation. Although if we look at SPY, we're still at a higher low. So if we're to test those lows again at 410, imagine what it would do to the markets. This is Fed driven, inflation going hot, rate hikes, and the effects of war, and the wave of earnings coming next week. I guess the markets are pricing in some risks. Some are taking profits on some growth stocks like Nvidia, AMD, which broke some major supports as well. For this video, we'll be looking at Google. They're expected to report earnings on April 26, Tuesday, after hours. Let's look at the earnings expectations for Google. This is Google's revenues the past year. 55 billion in April, July 61 billion, October 65 and 75 billion in February. A total of 257 billion in revenues. And EPS trailing 12 months of 112.2. This is if you add this 4 here. The analysts' expectations for Google in April 26 is 68.068 billion in revenues and an EPS of 25.89. They're expecting a revenue growth of 23% and a loss in EPS of 1.5%. My expectation is basically the same as their last year's reported earnings, 55 billion in sales and 26.29 in EPS. Why? I'm okay with them not growing their revenues. They just have to make the same revenues. That's my take on the earnings. I haven't bought Google yet. I'd love to own some, especially they're splitting the shares in July. I was just waiting for this, their quarterly earnings. Let's do a quick recap of my metrics. Google is now trading at fair values. I wouldn't hate you if you decided to start a small position here before earnings. I mean, Google is known for beating earnings quarter over quarter. If you look at these metrics, metric 1, we want an EPS multiple lower than 3. It's 0.19. This is very low. That's why I wanted them to split the stock. Second metric, we want to pay $1 or less for 1% of the money they're making. This is based on their lowest margins, the profit margin or the free cash flow margins. It's at 1. It basically screams fair values. Third metric, we want to pay a lower PE than their price to free cash flow ratio. It is lower at 0.88, a discount, but I wouldn't buy the stock because of this metric, just because I want their price to free cash flow below 20. It's 24.32. So, yeah. Fourth metric, they don't give out dividends, so nothing to put here. Fifth metric is historical PE. It basically says it trades at a lower PE now. I have a fair value here of 2,400. That's why I had an alert on this stock in the first place. I wouldn't mind buying Google stock right now because for a stock with this revenue growth, look at this. Very high growth and just this multiple. I mean, it basically screams cheap. I just had to wait for the earnings to kind of confirm my bias and hopefully seal the deal. Intrinsic value of 1,074. This is from Guru Focus. Well, I don't know about this, but I'm a buyer of Google at the current price, 2,400. These are my entry prices and PEs, 18, 20, 22. This is with 30% margin of safety from their highest margins. If I could buy it below 2,000, that would make me the happiest man on earth. But I can only hope. Them splitting the stock should help increase their market cap. I want you to buy the stock before splitting the stock because look at this. If this growth continues, I think this should trade at 2 times multiple. You can buy it and own a share now by simply dividing your entry price by 20 since they're splitting the stock 20 is to 1. The markets are not valuing this company as much just because it looks expensive. I just hope they start giving out dividends, to increase shareholder value. Although owning a larger piece of the pie by buying back shares should suffice. They buy back shares, their revenues are growing fast and hard, very high cash on hand, they're basically debtless, and the moat is incredibly strong. These are just some of my reasons why you should buy the stock. But again, why not just wait for their earnings?